Earnings season is in full swing, and over the next few weeks, we're going to be hearing from the biggest fast food companies. Yahoo Finance's Brooke DiPalma joins us now to tell us what the word on Wall Street is ahead of some of those reports. Brooke, what do we know?
That's right. Well, inflation is certainly a hot topic for the beginning of 2023, particularly on labor and commodities, in addition to that impact of inflation on unit growth. So first, wage over the past year in 2022 in total was up by 4.6%. That's average hourly pay. Now analysts expecting a gradual improvement. They say that 90-day turnover has been improving, as well as that starting wage for new employees has stopped going up. In addition, while not likely to be mentioned in the earnings call, Starbucks stores have been filing for unionization representation on a decrease there in just the amount of stores that are filing for union representation there. So another labor impact story to look out for this earnings season. Food inflation alongside labor inflation also taking a toll. We've seen higher costs on eggs and vegetables, dairy, pork, and poultry seeing a deceleration, but not necessarily a decrease, certainly weighing on companies' margins there. But really the big story here, as we move past COVID-19 era permit delays, as well as supply chain strain that really took a toll on unit growth, you can expect company-owned stores to really see a robust plans for unit growth. In particular, Shake Shack gave us some preliminary Q4 results at the ICR conference. As you can see here, they plan to open 65 to 70 locations in 2023 with big plans for licensed businesses in Asia overseas. Of course, COVID in the background, still a very prominent in Asia as far as expansion goes. But as far as franchise-owned stores, of course, that's companies like McDonald's and Yum Brands, you can expect to see less growth there. At least that's what analysts are saying, as the impact of inflation and labor and just higher costs overall continue to impact franchise operators. And they say that right now margins are just a bit too tight to eye further growth. But for company-owned stores like Starbucks and other stores like Chipotle, Shake Shack here in the U.S., they could really withstand those major headwinds, and they're planning to expand this year.
Brooke, we got to leave it there, but great information here. Thank you for that report, Brooke DiPalma.